Good evening, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, well, unfortunately, we had a pretty big day of pullbacks. The S&P down over 1% and the QQQs down over 1.5%. Now, it all started off this morning with some pretty steep declines all across the board pretty much in terms of our favorite big tech names. Apple did good, Google did good after their earnings, but you can see the Meta impact down 11.3% on the day, and it kind of took a lot of the sector peers with it. AMD, Amazon, Microsoft not having a good day, even though they posted pretty good earnings yesterday. Netflix, NVIDIA, Tesla down as well. A lot of the biggest names in the game, especially the large big tech players, coming down, and that did weigh on the indexes. However, early this morning, there was a bit of a silver lining. The RSP, the equal weight S&P, started off the day pretty good, meaning we had a lot better breadth early this morning than we did in the past previous days. As a matter of fact, the heat map is a stark contrast to what we have been seeing all throughout the week. You remember, most of the week, big tech was bright green and the whole rest of the market was red. Today, we actually flipped. Big tech was red, largely due to the sentiment from Meta earnings and possibly people being timid into Amazon and Apple earnings today. And the entire rest of the market started off the day green. However, the gains across the rest of the board, guys, kind of decayed all throughout the day. You can see this on the equal weight SPY coming down and down and down all throughout the afternoon, which did lead the indexes to bleed a little bit more into the last few hours of trade, resulting in the declines that you do see today. Breadth was a little bit better than the previous few days, but still, the market's struggling to kind of stay afloat, and we did print a pretty big red day. We did have a lot of news come out throughout the day, though. Number one was the results of the Trump and President Xi meeting. Very good results, as a matter of fact, coming to a lot of common ground. We're going to cover that in a few short moments as well. Thereafter, after the close, we got some news on Netflix. Netflix planning a 10-for-1 stock split while their shares are trading above $1,000. That helped lift the company in the after hours as well. And we also had some preliminary results from all the earnings that we've had so far. 85% of all companies that have reported so far, 195 to be specific, are beating earnings estimates, which is very good. So all these news combined, right, led to a bit of a bullish sentiment in terms of the macro data that we got today. But once again, the markets just weren't having it over the course of the session. So that being said, guys, in today's video, we have a lot of different things to cover. Number one, of course, we'll be going over those three pieces of news that we just discussed: the Trump and Xi meeting, the Netflix 10-for-1 stock split and when that's going to happen. And lastly, do a quick little summary of what's going on in earnings season. Why are all these companies beating but still not getting the stock performance? Thereafter, we have three very big earnings that I have prepared for you guys today. Number one, we're going to talk about Amazon and their huge beat. Number two, we're going to talk about Apple and their very good performance as well. And number three, we're going to be talking about Reddit. Shout out to all the other companies reporting earnings today, but unfortunately, I don't have time to cover absolutely every single one of them, but I will probably be catching up on a few different companies tomorrow. Tomorrow, what I plan to cover after the close, possibly Booking Holdings, Mercado Libre from yesterday, maybe Chipotle because they fell off a cliff yesterday, and maybe Fiserv for the same reason because they fell off a cliff, and I'm getting a lot of questions. So we might have to do those four companies in tomorrow's video on the Friday session. So for the rest of the video, of course, we will do a full index rundown in terms of the technical analysis and just get a sense of the rotation and the market breadth in the market. Right? Thereafter, we will do the exact same thing on our big tech list down here. Take a look at some of these big tech names after their declines today and subsequent good performance in the after hours, and determine once again which one of these companies or which, portion of the market here is possibly good to be invested in for some short-term swing trades or some long-term positions as well. And if we have time at the end, no promises, but as usual, if we have time, meaning if the video isn't 5 hours long, we will take a look at some of the biggest gainers and losers of the day. So I'll try to get through the video as quickly as possible without talking 5,000 miles per hour, but no guarantees. If we have to recap some of these names tomorrow, we will just do it tomorrow as we have covered them a lot this week so far already. So that being said, that'll be it for today's video. Let's get right into it. So as I said, the SPY down 1.1, the Qs down 1.53. The heat map did not look too bad, but still, unfortunately, guys, just not the best performance. You're going to see a lot of green here, but also a lot of big red. Now, a few of these movements are, of course, as a result of earnings. Big tech largely down because of Meta and Microsoft's underperformance today, which did weigh heavily on the indexes, but even Oracle down 6.69%. They didn't have earnings, and NVIDIA and Broadcom and even AMD pulling back pretty hard for the semiconductor landscape. Financials, one of the bright points of the day, didn't do too bad. The banks and the credit cards, especially the credit cards after MasterCard's earnings, not performing too poorly. Healthcare was a bit of a mixed bag. Unfortunately for healthcare, the health insurance sector remains very, very soft. UNH leading the way down, but a lot of other corporations in that niche heading down multiple percentage points today. And the bottom half of the market was just very mixed. This bottom half of the market early this morning, guys, was very healthy. Most of the names here were green, but as I said, over the course of the session, the market just got progressively weaker, unfortunately. And you can see that from the one-day performance. Only real estate, healthcare, financials making it out in the green. You might see a lot more green on the board right here, but unfortunately, this board, you can't really see a lot of the smaller companies. So sadly, a lot more declining issues than advancing issues today. Consumer cyclical getting hit the hardest with those Chipotle earnings yesterday, and several other companies from apparel to restaurant brands coming down very much. Technology and communication services also feeling the blow today. Where do we stand on the 1 week? Well, we keep losing more and more sectors. As of right now, only communications and technology up higher. Everything else to the downside. The market definitely pulling back from all-time highs, and that is in spite of some pretty good news that we got over the course of the day today. You would have expected with a interest rate cut yesterday, the end of quantitative easing, which we talked about as well, right? Or the quantitative tightening cycle, rather, the Fed winding down its balance sheet, essentially, and favorable outcomes from the Trump and Xi meeting, that the markets might have been green. But we've been talking about this, guys. They've pushed a lot. We've left behind some gaps, and because big tech yesterday didn't have absolutely picture-perfect stock performance, it kind of weighed on the indexes a little bit overall, and some of those reports from some consumer discretionary companies just weren't that good, and it kind of brings back the thesis of, well, it's a K-shaped economy right now. The upper class is doing really well, the middle class is just getting by, and the lower income demographic is starting to struggle considerably, so those concerns still remain front and center in the market. Now, in terms of our news catalyst for today, President Trump and President Xi, historic meeting last night for the first time in over 6 years, and here are the results. So, cutting fentanyl tariffs on China to 10% from 20%, and Beijing delaying the latest rare earths curbs by a year. Pretty good. So a 1-year agreement with China on rare earth supplies. They will now have access to the market, which is good. But we know that the Trump administration wants to build out the pipeline back home in the US, but also sourcing them from different countries. Obviously, we know we covered this on the channel last week. Big deal with Australia in terms of that respect. Trump cutting the fentanyl tariffs, which brings down the overall tariff rate imposed on China from 57 down to 47% right now. Better than the 150% that we had back in April, of course, but still relatively high. Additionally, China's Commerce Ministry said that the U.S. will postpone measures that blacklisted majority-owned subsidiaries of Chinese companies on the U.S. entity list. So some of the restrictions being lifted against Chinese corporations. And then they finally agreed to start buying soybeans again. So Trump saying that there will be tremendous amounts of U.S. soybeans and other farm products that will be purchased by China starting immediately. I'll remind you, China stopped most of their purchases of American produce, especially soybeans, about 2 quarters ago at this point. So those will be resuming. A fairly good meeting, but still a lot of questions left on the table in terms of what's going to happen after the 1-year agreement on critical minerals. Are we going to go back to the negotiation table or what, right? So a lot of questions remaining on the table, but just from the preliminary meeting, it was good. I'll remind you, President Xi will be visiting the United States in the next few months, and then President Trump will be visiting China in turn. So we might just have more headlines over the next 2-3 months in terms of these developments, but that was it for today. Now, in other news, Netflix planning a 10-for-1 stock split with the shares trading over $1,000. That really helped lift the company in the after hours up over 3.24%. I will remind you, a stock split has no material impact on the company whatsoever. However, what it does do is for all investors that don't have access to buying fractional shares, they will be able to finally purchase Netflix shares at a lower share price, obviously, for those full round shares. But what it also does is it frees up a lot of volume in the options market. Obviously, when a stock trades well above $1,000, the call options are pricey, the put options are pricey, so you might be able to see more trading volume come into the stock, which is good overall for liquidity and volatility purposes. So apparently investors seeming to like that portion of news in the after hours today. In terms of the dates when you will be able to expect that, well, shareholders on record of November 10th will receive 10 shares for every share that they do own, and those will be issued on November 14th after the close of trading. So very exciting news from Netflix. I'm looking forward to being able to sell put options on this one with a lot less cost up front. Moving on further, guys, in terms of the earnings recap so far with over 195 companies that have reported, we'll do this again next week because this week there were 176 companies reporting. Very large week in the markets for earnings, of course. So we'll do it again next week. But as of right now, where do we stand? So take a look at this picture right here. You should see a couple different things, right? Number one, 85% of companies are beating in terms of earnings results, which is a surprise of 7.4%. These are some of the best numbers that we have seen in the last half a decade. However, look at the cumulative returns since September the 30th. And this kind of comes into the breadth analysis of the market, right? To where only AI names are performing well. A lot of other companies with solid earnings, solid balance sheets, and decent growth outlooks just have not been getting any investments whatsoever and keep seeing their stock prices being crushed since the month of August, into September, and now October. It's been a rough last 3 months for several segments of the market. Right? They've just not been carrying up with big tech. Excuse me, I kind of switched the tabs too quickly. Look at cyclicals, right? Fairly dubious portion of the market right now. A lot of those companies, 81% of them beating on their earnings. Defensives, 92%. But you guys know, right? A good portion of the consumer defensive companies just haven't been performing too well at all. Technology, 85. Consumer discretionary, 75. Industrials, 86. Basic materials, 80. Communication services, a bit soft there. But then again, only 5 out of 21 have reported. So not the greatest sample size overall. Financials, 87% beating on earnings. Real estate, 91. Energy, 88. Healthcare, 89. Consumer staples, 92% so far. And utilities, 100% of all companies beating. However, even with those beats and the significant surprises, look at the cumulative returns, right? Cyclicals, 1.4. Technology, 3.9% returns. But that's it, guys. Everything else to the downside, despite a very positive skew on earnings beats and a positive skew on earnings surprises, right? So that being said, it's been a very rough market in the most recent 2-3 months, depending on what you've been invested in, right? We talk about it all the time. Very solid companies that just haven't done anything. Visa hasn't done anything, guys, in, well, 6-7 months, but more specifically in the last couple, they've just been down. MasterCard as well. SPGI, same concept. Some of the insurance corporations, like, you know, whether it's Allstate or whether it's Berkshire, right? Whether it's companies like PGR, all down, right? Companies like Booking Holdings, which had phenomenal earnings, they've just been coming down as well. So many extremely solid companies, which we cover on the channel, have just been straight down or just flat and underperforming over the course of the past few months. What you need to see is a bit of market breadth come back. And hopefully this earnings season will solve that over time. But as of right now, breadth still remains a bit of a concern. Percentage of stocks above their 20-day EMA, guys, once again falling today. Only 36% of all stocks in the S&P remain above their short-term moving average. So momentum, in a broad sense, is not very strong. It's very concentrated right now. Percentage of stocks above their 50-day EMA, we're kind of like at some of the lows that we saw during tariffs, despite having a very decent economic backdrop right now and a very decent earnings backdrop as well. Only under 40% of all stocks above their 50-day EMA. And in terms of percentage of stocks above their 200-day EMA, this is a bit healthier. It shows that most of the market has recovered since the April tariff lows, but as you can see since August, we haven't really been making any improvements. So the companies have been declining on the short term, but still nothing in terms of worrisome moves below their 200-day EMA, which is kind of a big line in the sand for longer term monthly momentum moving average in terms of all the index, in terms of the components of the index, right? So very, very mixed market right now. You need to see some breadth improvements, because if we keep on going down this path of low market breadth and high concentration, we talked about it in yesterday's video, guys, that doesn't usually end well, right? Especially when you're coming out of overbought conditions on the daily, overbought conditions on the weekly on SPY, clipping into a 3-4 month trend line at this point in time, extended from your weekly 12 EMAs, very extended from the monthly 12 EMAs. It just opens up the door that if any one of these bearish catalysts strikes again, whether it's the jobs, whether it's implications from the government shutdown, whether it's the corporate credit and bankruptcy news, China tensions and tariffs, you can pretty much take this one out of the equation right now, right? But if any one of these narratives rears its head again, it's going to be very easy, especially when you're working on thin breadth, to drop the markets quickly and rapidly. We are still waiting to see what the catalyst can possibly be, because right now we don't have any. So right now we're just in a bit of a technical pullback right now, but overall there is no big bearish catalyst that can lead you into multi-week declines, at least not at this stage. But as I always say on the channel, guys, you got to take it one day at a time. But if you recognize these signs of weak market breadth, it just has to have you lighten up a little bit on your positioning and also be going for more quality names, right? So you kind of have to reduce your positioning, reduce the shorter term swing trades. You can still do longer duration thesis for a company's fundamental expansion type of trades with leap call options and things of that nature. But short duration trades, and even if you're selling some put options, you really have to kind of tighten up the amount of companies that you're willing to play to really some core positions that have positive sentiment, positive revenue, EPS growth, but especially positive sentiment, because even though some companies can have positive fundamentals and whatnot, if the sentiment is just not good, you're going to kind of look like Adobe and CRM at the end of the day, right? Shout out to those two companies. They've been cheap and they've been cheap for a while, but it's the sentiment, it's the story. You can have, in this market, you can have good fundamentals, cheap fundamentals. The technicals could show you that you're, down deep from the all-time highs into big support levels, but until people buys your story, your stock price doesn't move. So I'm kind of concentrating my bets into some good stories on pullbacks in companies that are still in monthly uptrends. And I'm not doing so many bets on companies like this that are in monthly downtrends, not until we get some possible breadth improvements or not until we get a bigger correction in the SPY. So I'm concentrating my bets into the A+++ crystal clear setups. I need to have no negative sentiment, no negative narrative surrounding the company. However, for some of the larger plays and some of the longer duration plays, especially the long-term portfolios, I am adding to the very high quality companies, just DCAing with some shares for these companies that I want to hold over the next 5-10 years, right? Companies like SPGI, companies like Moody's, companies like Visa, companies like MasterCard, companies like Booking.com, and other companies that have kind of suffered the same fate of just short-term negative sentiment, but still with longer-term good fundamentals. So that's how I'm structuring right now my trading versus my long-term investing. My long-term investing, I'm not chasing things that are printing all-time highs. No. I'm just building up further some of the positions that have been left behind. And as of most recently, some of the earnings results that haven't been received too favorably by the markets, buying more Meta today for the long-term portfolio, and also other companies like Netflix in a nice monthly consolidation with strong fundamentals, also just buying more for the long-term portfolios, but not short-term swing trades on these types of companies, right? No, for those, I need the short-term daily and weekly uptrends. So hopefully that introduction sheds a little bit of light on how I'm kind of viewing things in the market right now. I figured I should cover it because we've been talking about it all week, but I know a few people asked me like, well, because of what's going on, how are you structuring your trades or your long-term investments? Hopefully that makes sense. And shout out to Mercado Libre. Mercado Libre is another company that have been building a lot of longer term shares, right? Especially near these lows, not so much doing any short term swing trades on this business overall. So that being said, that's it for your introduction and your news recap. Hopefully you guys enjoyed. Now let's dive into the good stuff, shall we? So first off, we got to talk about these insane Amazon earnings. Amazon currently up 13% in the after hours, cracking above 250. Now, I'm not going to do it. I could say a big I told you so, but I'm not going to do it because I'm pretty sure that a lot of you guys maybe agreed with the thesis. It reminded me a lot of Google down here when there was short-term negative sentiment on Google for XYZ reason, the short-term negative sentiment on Amazon was because of their lower than sector peer AWS numbers in terms of last quarter, which is why the stock has been struggling. And Andy Jassy started off the earnings call with a banger, man. He literally went for the throat. He said, listen, he started off the earnings call, and that's why I upload these videos, guys, a bit late during earnings season, especially for the big tech players. I listen to their earnings calls because I want to get a sense of the tone. Andy Jassy literally, in the first 2 sentences of the earnings call, referenced the AWS 20% year-over-year growth at a $122 billion yearly run rate and said, it's much harder to get a 20% year-over-year growth at a $122 billion yearly run rate than it is for some of our sector peers to run excess of 30% year-over-year growth on half or less than half the annual run rate in revenue, referencing the law of large numbers and basically patting himself on the back by saying, yeah, we're the biggest player. I would like to see other players this big doing these numbers at such high annual run rates. That was pretty fun because people criticized Andy Jassy last year, or last quarter rather, about, not giving too much insight as to why AWS printed a somewhat low number compared to other players like Microsoft and Google. That being said, that's a little bit of an intro, a little bit of a teaser for you guys. In terms of the numbers, they absolutely destroyed this quarter across all metrics and gave us phenomenal insights into not only AWS, but into every single portion of their business, which is just printing gains right now. In terms of EPS beat, 24%. Revenue beat, 1.27%. Very, very solid numbers for Amazon. We're going to deep dive the numbers right now. In terms of the easy stuff, revenue was up 13% year over year. Strong. AWS revenue, 20% year over year. Annual yearly run rate, $120 billion plus $33 billion in a quarter. Ad revenue for Amazon, 24%. This has been a highlight of the company over the course of the past year as they've been growing this aspect of the business excessively strong, guys. And operating income, 25% year over year. Look at the improvements in operating margins that Amazon has been making over the course of the past 8 quarters. Phenomenal stuff, guys, all across the board, right? If you take a look right here, in terms of the guidance as well, strong, right? In terms of the guidance was supposed to be 208. They came in at 206 with a top end of the range, 213, beating the estimate. Very solid. That implies a revenue growth rate here of 10 to 13% year over year. Top end would be in line with this current quarter as well. In terms of your segment breakdown over and above AWS, online stores, net sales, this is Amazon's in-house products, 9.8% year over year, beating the estimates. Physical stores, they beat on that as well, 6.7. Third-party seller services, everybody else who sells on Amazon, beat the estimates, 12% year over year. Subscription services, beat the estimates, 11%. North American net sales, beat the estimate, 11%. And international, beat the estimate and up 14% year over year. Phenomenal quarter for Amazon all across the board. But some of the highlights, definitely AWS and their advertising segment overall. Net income was pretty good as well at $21.2 billion, which does give them some of the best net margins that we've seen on Amazon in the past 4 to 5 quarters. Their net margins, guys, 11.7%, which is an increase from Q2 at 10.8%. For so many years, we were used to Amazon having 2, 3, 4% net margins. Amazon, over the last few quarters, guys, printing 9, 10, 11% quarters. The company is growing fast, but becoming more profitable. And we've been talking about this thesis that if Amazon chooses to, they can print some of the highest levels of net income on the planet. I'm not saying in terms of the net income margin percentage rate. I'm talking about the actual dollar amount, guys. A tremendous amount of net margins because they make so much revenue, over $600 billion. Even 10% margins is $60 billion to the bottom line, which is absolutely massive for any company on the planet, of course, right? So if we continue into a bit of Amazon's guidance right here and just comments by Andy Jassy, we continue to see strong momentum and growth across Amazon as AI drives meaningful improvements in every corner of our business. AWS is growing at a pace that we have not seen since 2022, re-accelerating to 20.2% year over year. We continue to see strong demand in AI and core infrastructure, and we've been focused on accelerating capacity, adding more than 3.8 gigawatts in the past 12 months. 3.8 gigawatts, to give you guys an idea, this is more than every single other big tech company in the game individually, guys. They have the most amount of capacity that's came online in the past 12 months, showing why they're the biggest cloud provider on the planet. In stores, meaning their e-commerce business, we continue to realize the benefits of innovating in our fulfillment network, and we're on track to deliver to Prime members at the fastest speeds ever again this year. Expand same-day delivery of perishable groceries to over 2,300 communities by the year end, and double the number of rural communities with access to Amazon's same-day and next-day deliveries. The highlights do not stop there. He spent a whole bunch of time. You guys know Andy Jassy. He used to be the head of AWS when Jeff Bezos used to be the CEO, and now Andy Jassy's the CEO. So if there's one business that he knows like the back of his hand because he grew it from nothing, it's AWS. And they talked about so many different things, and we're going to highlight these things right now. They saw continued adoption of Trainium 2, their custom in-house ASIC AI chips, which is fully subscribed and a multi-billion-dollar business that grew 150% quarter over quarter, guys. These numbers for AWS are insane. And by the way, he talked about Trainium 3, their next edition. How is that one going to do? Yeah, Trainium 3 is oversubscribed. A lot of that going to their direct partner, Anthropic. He did highlight that they're still a huge customer of NVIDIA, but they just have so much demand that not only are they one of the largest customers of NVIDIA Blackwell chips, it's just not enough. They're building their own in-house chips as well. And even that is not enough for Amazon. So crazy growth. Launched Project Rainier, a massive AI compute cluster containing nearly 500,000 Trainium 2 chips to build and deploy Anthropic's leading Claude AI models. Added 3.8 gigawatts of power capacity, more than any other cloud provider, as we already said. There's so many highlights here, but we're going to go over the big ones. Saw strong adoption of Transform, an AI agent that makes it easy for customers to migrate to AWS. Transform has saved 700,000 hours of manual migration effort, equivalent of 335 developer years of work. And that is only year to date. So is AI paying dividends for Amazon? 100%. They grew Connect, an AI solution that enables contact centers to provide consistent, personalized customer experiences. And that is to a 1 billion annualized revenue run rate business in recent weeks, with 12 billion minutes of customer interactions being handled by AI in the last year. Shout out to Salesforce. Now Amazon stepping on their toes, starting to do their own customer service agents, essentially building out the whole agentic workforce for other businesses. This is absolutely insane. Amazon is an octopus. It has arms arguably everywhere. And we didn't even talk about their pharmaceutical business, which is doing well too. Announced the general availability of Agent Core, a set of infrastructure building blocks for developers and companies to build secure, scalable agents. Once again, stepping on the toes of many other people trying to build agents right now. They signed new AWS agreements, as they do every single quarter. Delta Airlines, Volkswagen Group, Fox Corporation, ServiceNow, Qantas Airways, U.S. General Services Administration, SAP, Lululemon, and many other companies as well, just to name a few. Even Perplexity, shout out to them. Expanded same-day deliveries of perishable groceries to 1,000 plus cities and towns in the U.S. with plans to reach 2,300 locations by the end of 2025. This is insane, guys, right? They started this. I mean, they were used to have the Amazon physical stores, right? Amazon Fresh stores. They started this business this year. They're already in 1,000 cities, which is nuts. 2,300 by the end of 2025. Not last, but coming to the last ones, saw strong usage of Rufus, the AI-powered assistant in Amazon's store that will help you shop and answer all your questions, with 250 million customers using it this year. Shoppers using Rufus are 60% more likely to complete a purchase. That's absolutely nuts. Announced partnerships that allow advertisers, this is huge, that allow advertisers to buy ad space on Netflix, Spotify, and SiriusXM Media through Amazon ads. That's a huge component of their business, guys. It's not for no reason that they grew their ad revenue 24% year over year. And a few more, they debuted NBA on Prime in more than 200 countries. Very strong move right there. See, Amazon, they just have so many businesses, Look at all these businesses. Expanded their Project Kuiper. People don't even know about this. This is a mini Starlink. To 150 plus satellites, signing agreements with JetBlue, Australia's national broadband network, and a telecom company in Kazakhstan. It's just the beginning for Project Kuiper. Nobody even talks about this aspect of Amazon's business. They began offering Zoox robotaxi services to customers in Las Vegas as well, for free, by the way, for now, which is a purpose-built robotaxi. So many different things that Amazon is doing, and they highlighted every single one of them during the earnings call. As I said, the best definition of Amazon, essentially, this stock is basically like an octopus. They're absolutely everywhere, showing extremely good numbers. We don't have to go over everything, but I'm just going to show you the visual representation of where they're going. Net sales, very strong, right? Trailing 12 months. Operating income, still very strong, and that's in spite of all the expenses that they're incurring to scale various arms of their business. Trailing 12 months operating income moving up and to the right, which is very good. Improving profitability. Net income up 38% year over year as well. Very strong too. Trailing 12 months net income, $76 billion of net income to the bottom line. That is absolutely nuts, guys. They're starting to deliver some of the most amount of net income cash dollars in the entire world right now for any business. Segment results, North America, very strong in terms of net sales. Operating income, it goes up, it goes down a little bit, but that one was definitely a bit of a pain point for them. Moving on further, international was a bit better in terms of operating income. Net sales, very strong as well. And it just goes on, right? AWS, strong move there and becoming more and more profitable as a business too. And free cash flow, that did come down because obviously they've been investing so much in CapEx, and the CapEx guidance moving forward as well is quite high, but the street did receive it pretty well. $125 billion in 2026, most of that going for increases in AI capacity for their own in-house Trainium models, but also probably for a whole bunch of NVIDIA general purpose GPU chips. So that being said, guys, Amazon, phenomenal quarter. I've been banging on the table for this one for a better part the last 3-4 months, saying it was one of my favorite buys in the market and one of my heaviest positions across shares, across leap call option positions and things of that nature. And now finally, just like Google, the street comes back around. People finally start realizing it. Now maybe, as of tomorrow, maybe the FOMO starts. I don't know. Maybe we get a pullback for possible more buys. But Amazon moving in the right direction, guys. My price target on this stock for the next few years is well above $300 to $350. Deep into 2026, early 2027. Is Amazon still a buy right here at $250 with everything that they just told us today? Well, if they're growing revenue at 9.5% per year for the next, on average, for the next 3-4 years, if they're growing EPS at 20% per year for the next 3-4 years on average per year, at $250, it gives them a forward price to earnings of only 32.81 and a very cool 1.64 peg. Is Amazon still a buy at $250? Yes, but hopefully you guys were also able to pick up some shares all throughout the year or build some possible swing trade positions. Short-term trades up here, it's going to be a bit tough. But if we see some further consolidation with the rest of the indexes and we come back and retest these former all-time highs, decent time to reposition for some swing trades as well. But will I be buying even more Amazon shares as part of my long-term portfolios up here? Absolutely. I think there is a lot of room for the upside expansion. And I will remind you, come 2028, guys, how much revenue Amazon is going to be actually doing. Close to $1 trillion in revenue, very consistent revenue growth, very consistent EPS growth as well. I'm very excited for this company over the next 3-4 years as they become more profitable and they scale every single line of business that they do have. That's everything for Amazon. We spent a lot of time on it, but you have to spend a lot of time on this stuff, guys, because you have to analyze all the different segments of their business and where the growth drivers are coming from and why. I heavily suggest, if you have time this weekend, to go listen to the earnings call. It's about 40-45 minutes. It'll probably be well worth your time if you are an Amazon investor. And that is it for company number one. Company number two, equally as big, right? Apple, good old Apple, coming up 2.38%. They were up at one point in the after hours, about 4% higher, and sadly pulling back a little bit. However, Apple delivered a really strong quarter. Now, not all metrics over the course of this quarter were phenomenal, but the guidance for Q4 was very strong. And that's why the stock had some lift. You'll notice that Apple actually declined when those numbers were released. But when Tim Cook went on CNBC for a direct interview after the earnings release, He gave guidance into Q4, and the guidance for Q4 is what has this stock lifted from the lows beyond new all-time highs right now, sitting at about $278 per share. That being said, for this quarter, they did pretty good, 4.1% in terms of EPS, and a nice little bump on revenue, beat on revenue by about 0.25%. So some of the very easy numbers for Apple at a first glance, you'll see that right here. Revenue was up 8% year over year, $100 billion quarter for Apple. Again, services revenue up 15%, a very good profit driver for the business. Operating income up 10% and EPS up 13% year over year with a nice little upswing in operating margins overall. If you want to take a deep dive into even more numbers, you can see right here, Greater China was actually down. Now, you might have heard me talk about the impact of the iPhone 17 sales in the Chinese market having very good numbers. However, I will remind you, there's only 1 week of iPhone 17 sales in Apple's most recent quarterly release. A lot of those good numbers will come out in Q4, and the guidance for Q4 was very strong. They also missed on America's ever so slightly, but as I said, the iPhone 17 ramp and the other products that they have will be coming in to the Q4 numbers. Product revenue, iPhones slightly missing the estimates here, up 6.1% year over year. Didn't matter for the street because they were focused on the iPhone 17, which will be coming out next quarter, of course, as I keep saying. Mac, they actually beat. iPads, unfortunately missing, but not by that much. And wearables actually coming in with a nice little beat right here too. In terms of overall products, they did beat on the overall products number, and services, they did beat on the overall number as well. Not too bad at all, but the highlight of this quarter is the guidance for next quarter. Apple sees a big December quarter driven by strong iPhone 17 demand, which we've been noticing on the channel just from the amount of backlogs and the amount of sold out iPhone Airs and other products in the Chinese market. Let's move into a bit of the article right here, the interview with Tim Cook on CNBC after the earnings release. Apple CEO Tim Cook told CNBC's Steve Kovac that revenue in the current quarter will increase by at least 10%, which is very strong because I'll remind you guys, Apple previously wasn't that good. They were only growing revenue by low single-digit numbers. Last quarter, we had 10%, which was the best quarter since December 2021. This quarter, 8%. Now, next quarter, back to 10%. Additionally, here's what Tim Cook had to say. We expect total company revenue to grow by 10 to 12% year over year. We expect iPhone revenue to grow double digits, which is a very nice change year over year. And we expect that would make the December quarter the best ever in the history of the company. Very strong words by the CEO. Cook said that Apple was confident in its guidance because of the strong reception for the company's new iPhone 17 devices, which he said was off the chart. And Tim Cook, you guys know Tim Cook. He's a bit of a reserved guy. He doesn't usually say things like this. So you kind of got to take this at face value when he actually commits to, putting out hard statements like that. We look at the results to date, the reception of the consumer on the very strong iPhone lineup. We're looking at traffic in our stores, which is up significantly year on year. We see enthusiasm around the world. Moving on further, Apple's newest phones went on sale on September 19th, so there is just over a week of sales in the quarter. Currently, we're supply constrained on several models of the iPhone 17. Apple's iPad business was also flat during the quarter. Apple did not release a new model during the quarter, but it introduced an upgraded iPad Pro with an updated M5 chip in October. We will see if iPad sales can actually get an upswing in a Q4. Cook said that most of the components in the services business were seeing accelerating growth. It was a run of the table, said Tim Cook in relation to that service business. Apple's Mac business showed strong 13% growth. Cook attributed the growth to strong sales of the company's MacBook Air laptop, which were refreshed in March alongside a $100 price cut, lowering the starting price to a somewhat more affordable $1,000. The company's sales in Greater China, which includes Hong Kong and Taiwan, fell 4%, but we will probably see a big upswing in those sales numbers in the Q4 upcoming quarter. We expect China to return to growth in this quarter because of the reception of the phone there, or the iPhone 17 family. I'll remind you, the iPhone 17 Airs are all sold out all across China. Cook said that the company still plans to release an updated version of Siri next year and said that there were more forthcoming partnerships like the company's agreement to integrate OpenAI's ChatGPT into Apple Intelligence. He said that our intention is to integrate with more people over time. Cook said that Apple had not changed its prices in response to the Trump administration tariffs. They said that Apple incurred $1.1 billion in additional costs related to tariffs during the September quarter. And he also said that they expected Apple to incur $1.4 billion in tariff costs during Q4, possibly just because of the increase in sales overall, right? Here's what he had to say further. We held the pricing that we would have done without any tariffs, and we're just absorbing the tariffs in gross margin. But you know what's funny about that? Apple's gross margin was 47.2%, better than the average analyst consensus of 46.4%. So Apple finding a way to get it done once again. Very strong release on the quarter for Apple. Right now, sitting at the all-time highs, close to $280 per share. I know what the next question is going to be. Is this stock currently a buy? Well, if we take a look here, revenue growth still at 5% per year. Possibly, we will be able to revise this to the upside, especially with the incoming numbers, maybe into 2026. But as it stands right now, you can see here that the revenue estimates are not very strong for Apple. We will see if there are some revisions to those numbers, but we might have to wait one more quarter to see actually how strong is Apple improving year-over-year sales and what could be their possible guidance into 2026. EPS, though, is the highlight of the company as it's a very profitable business. EPS growing substantially, 10.5% year-over-year, 25.97% net margins for Apple, which is roughly average in terms of historical numbers for the business. So right now, at about $270, is Apple currently a buy in the market? Well, it trades at 33.5 forward price to earnings. But we know that if we run the PEG ratio, which we divide the PE by the EPS growth rate, we get a PEG of 3.19, which is relatively high. There are so many other big tech names out there that have better revenue growth rates, better EPS growth rates that trade at lower multiples. Apple still has a somewhat decent free cash flow yield, but it's just not a very cheap company. There was a time to buy Apple over the course of this year, and that time, of course, was down here closer to $200 when the PEG ratio made a bit more sense when it was closer to 2. But I have been saying on this big old breakout from 240 up to now 270, it's probably time to pause some of those Apple purchases. It's a phenomenal company, and I will continue to hold every single share that I own. I don't see any reason to sell. Their ecosystem is extremely strong, over 2.3 billion users actively, right? Very strong subscription services for the business as well. I do believe it has one of the strongest ecosystems in the world, which is at the end of the day, Apple's big moat. However, there are times to buy companies and other times where you just have to hold, right? There's always 3 ratings: buy, sell, or hold. It's not a buy for me at these levels, nor is it a attractive swing trade opportunity. The last time it was here and here. Unfortunately, now I will be waiting a little bit as the stock is quite extended. And also in terms of a long-term portfolio position, it's somewhat tough to buy this one and justify the cost that you're paying all the way up here, but a phenomenal business nevertheless. You should be very happy if you are an Apple shareholder after this earnings release. That is everything for Apple. And now, company number 3, I'm going to switch it up a little bit. We're going to get into one that's a bit more volatile. We're going to get into good old Reddit. So Reddit, as a matter of fact, coming down 7.76% over the course of the day. A lot of tech sold off today, but look at the performance in the after hours. From the earnings lows to the top, 10.2%. Unfortunately, they're kind of right back to where they were in the pre-market this morning, but I'll have to give it to them. It was a very strong quarter for Reddit. If you take a look at some of the numbers right now, they beat on EPS by 52.5% and beat on revenue by 6.53%. Very strong quarter from this company. Some of the easy numbers are as follows. Revenue was up 68% year over year. Excessively strong growth numbers by Reddit. Daily active users, strong as well. 19% gain right there. Average revenue per user up 41% year over year. Able to monetize their customer base a little bit better. And adjusted EBITDA was up 151% year over year. The profitability of this company is going through the roof. Look at these adjusted EBITDA margins, guys, cracking 40%. For the quarter for Reddit, guys, you're looking at 27.8% net margins. That is a net improvement of 10% over what we saw in Q2 of this same year. I'll remind you, Reddit was not always a profitable company. You can see 2020 through 2024, they were struggling to scale profitability. For the last 4 or 5 quarters, though, those profits have been sending up higher and higher and higher. And as of right now, the best margins ever recorded for the company on record, 27.8. And And it makes sense. When you run 91% gross margins, all you have to do is increase sales and maintain this cost efficiency structure, and eventually more of that money will trickle down to the bottom line. Let's move into some more numbers for Reddit, shall we? We talked about revenue, EPS, all that good stuff. We talked about the net income beats as well, and the daily active users. Their guidance was also very strong in terms of double beats. Revenue guidance, 655 to 665. The estimate, 638. Very strong beat on revenue. Adjusted EBITDA as well in terms of some profitability metrics. That also came in above Wall Street's estimates. Very, very strong. We talked about the gross margins as well, but what we did not talk about is finally Reddit bringing in some decent amounts of free cash flow, $183 million in free cash flow overall. And the commentary from the CEO, 444 million people came here each week for authentic conversations they can't find anywhere else, and increasingly for engagement with brands, institutions, and publishers as well. Let's move into the Reddit article, shall we? Reddit shares rise on earnings beats and a strong forecast. The company said third quarter global average revenue per user was 5.04, as we said, but we did not say is they beat the analyst consensus of 4.82 by a fairly wide margin, guys. It's like a 5% beat. It's not something small, right? Reddit's other revenue category, which includes the company's data licensing business, rose 7% year over year to 36 million. Google and OpenAI are some of Reddit's biggest data licensing partners. They want the data on the users and they are willing to pay for it. And that gives Reddit a nice additional revenue segment. I'll remind you, for them, it's about licensing and advertising. Advertising obviously being the biggest one, 550 million, 74% year over year for the company. Reddit's logged in daily active users for the US, its most lucrative region, rose 7% year over year to 23.1 million during the third quarter. You will notice that Reddit gives two numbers, daily active uniques, which is very good, but over and above that, because you know that you can browse Reddit without being logged in. However, a focus for Reddit is the amount of logged in users with accounts, because they can monetize people with accounts a lot better than they can monetize people who are just browsing without accounts. That's why this metric matters. That was slower than the 12% year-over-year jump Reddit recorded during the second quarter when logged in daily active users for the US was 22.9 million. So a bit slower growth. And that's maybe why the stock isn't jumping like 15, 20+% in the after hours, because there's a bit of slowdown. So apparently Reddit struggling a little bit with converting people just browsing to getting them to actually open an account. This is the fifth quarter in a row in which the company sees its US logged in user growth slow. If there is one thing that you can pick apart from this earnings, it is that. It's the fact that they need to do a better job of converting people just browsing to people with actual accounts. The company's third quarter logged in daily active users rose 14% year over year to 50.2 million. See, here they only talked about the US, the most lucrative region. This is total, right? While its global logged out daily active users jumped 24%. So once again, more people browsing than people actually creating accounts and staying logged into those accounts. Investors have been watching for any changes to Reddit's user growth amid Google increasingly debuting generative AI features like AI Overview, which provides summaries to search questions. A good portion of Reddit's volume in terms of traffic comes from people searching up questions and then looking at people having an actual discussion on the topic for actual user feedback. A concern that was with a lot of these large language models, AI chatbots, that people would just use those instead of going to Reddit. Reddit has seen a wave of users come to its platform from Google, and the social media company makes more advertising-related money from users who create accounts. The Reddit CEO told analysts on Thursday that the company is not currently seeing any major traffic from AI-powered chat apps. I'm looking forward to continuing to work on these things with these partners, but they're not a major traffic driver today. But I think there's plenty of opportunity there as we continue to work together. So he wants for the AI chatbots to say, hey, when they're answering a question that somebody has, hey, take a look at this discussion on Reddit if you want to have actual user feedback. So far, that isn't happening so much. In a response to an analyst question about how Reddit plans to convince more people to create accounts and routinely use its app, the CEO reiterated previous comments about improving the platform's user experience. The company is working on making sure there are no barriers preventing users from seeing relevant content based on their interests. The Reddit Chief Operating Officer, Jen Wong, said that the company is increasingly running performance marketing campaigns intended to attract more users, particularly those overseas who may not be aware of the platform. Of course, a lot of the traffic in the biggest market is the US, but they want to expand internationally. Although the company has not historically relied on marketing to obtain new users, Wong said the promotions will help in countries where our awareness and consideration is lower than in the US because we're newer. We saw an increase in Reddit app installs as a result of brand campaigns, which I think is good, said Ms. Wong. And we saw movements in brand awareness and consideration, which I think was also positive and provides a foundation for performance later. So they're not advertising so much in the US, but internationally they are doing so because they want to grow their footprint. Overall, a very good quarter for Reddit, but as I said, if you are a Reddit investor, you need to pay attention to Reddit's ability to basically convert just normal traffic that doesn't have accounts into actual account holders, because that is where Reddit makes the most amount of money, right, in terms of monetizing their user base. Overall, if you want to see these numbers represented visually, very strong. Look at these increases in revenues over the course of the past 5 quarters. Very strong. Average revenue per unique user also is going steadily up and to the right. Gross margins, very solid, maintained at the 90% range. Operating expenses, growing a little bit, but growing less fast than the revenue numbers, which is why their profit margins are increasing through the roof. Net income, very strong, keeping on more and more profits every single quarter, and adjusted EBITDA margins as well, very strong, 40% too. So overall, guys, visually, Reddit is expanding everything in the right direction. Nothing really bad to say about the company whatsoever. They're bringing in more operational cash flow and more free cash flow as well, which is your yellow column right there. And in terms of diluted shares outstanding, are they diluting shareholders in terms of stock-based comp? As a matter of fact, no, not diluting that much. Share count is staying roughly the flat or the same, which is also something good for the company too. Overall, guys, very solid quarter for Reddit, but unfortunately, they've been coming down a lot from the all-time highs, right? Where they stand right now in the after hours at about 210, they're still about 25% off the all-time highs, which raises the age-old question, is Reddit a buy? With these very high revenue growth rates, the improvements in gross margins, the improvements in daily active users, and average revenue per user, is this company a buy at $214 in light of these fantastic revenue and EPS growth rates for the next few years? Revenue is growing at an average of 28% per year through 2028, and EPS is growing at an average of 53% year over year. These are going to be some of Reddit's best growth years. And as a result, do we want to capitalize and possibly position for some longer duration swing trades or some medium-term investments? At 214, where they are in the after hours right now, with these revisions for the next few years, you're currently trading at a 62 forward price to earnings. But keep in mind, their growing earnings at 53% per year, which gives them a very low 1.2 peg. That was really good. When I redid the numbers with more estimates with the company's guidance today and the numbers that they did show, very strong. 1.2 peg, very good. Price to sales, a 13, which is arguably this norm for a fast-growing tech company like this. As a result, if this stock is trading at 214, you can say that it is still trading relatively cheap. The company is only a $37 billion company. If they only maintain, okay, because EPS is growing really fast, eventually that will slow down. Revenue is growing really fast, eventually that can slow down too. But if we just take a straight line price to sales and give them like a 10, right, for 2028, well, this company could transform into a $45 billion company, which would be a nice increase in share price, possibly all the way back to the all-time highs. However, I do believe with this fast growth and rapid expansion, you could get a little bit more in Reddit. And as a matter of fact, it's not the worst opportunity out there in the market. The stock is still trading relatively cheap. So if I wanted to benefit from Reddit's high growth over the next 2-3 years before these growth rates slow down, it could prove to be a very good investment as we move higher and higher into the market cap range, talking possibly all the way up to $50-60 billion over the course of the next 12 to 18 months. If they continue good execution, but always keep in mind, they have to start monetizing their, the traffic that doesn't have accounts so far just yet. So that's the one thing that you got to pay attention to on Reddit. I use the company every single day. And as a result right now, well, not as a result of that, but with the revisions here and the fact that the stock isn't that expensive, could be a very interesting trade. And you possibly would see me with some shares in the near term future. And with that, that wraps up all of our earnings headlines for today. Hopefully you guys enjoyed those earnings breakdowns. Now, let's dive into some juicy charts, shall we? So, taking a look at the good old S&P 500. So right now we're in full consolidation mode, still a couple gaps left behind us. Now, in terms of the post-market performance, you might have seen the after-hours move. We were up about 1% plus on the SPY and the QQQs as a result of Apple's bullish earnings, Amazon's bullish earnings, and their impacts on the respective tech companies in the market. So tomorrow, wouldn't be surprising if it is somewhat of a recovery day. That being said, if it's not, and we just give it all back somehow, Amazon and Apple may not give it back, but if the overall breadth of the market still does not improve, you can see further consolidation. But I'll remind you, who's in control? Still the daily bulls, looking for a big old daily higher low, maybe down here into support, 674, down to about 668. The line in the sand, though, is 664. If you lose that level, you lose the daily uptrend, and it would look something like a bit of weekly consolidation in the markets, possibly going down to the 12 EMA, which the bulls have done a good job protecting over the course of the past 4 or 5 months of rally. So the bulls are fully in control right now, but in the introduction, I did highlight a few current problems with the market right now, so make sure you're paying attention to those problems on a daily basis. Moving on to the QQQs right now, same concept. Big sell-offs on Meta, big sell-offs on big tech today. As a result, the QQQs moving a bit lower. Still a few gaps remain to be filled. We'll see if the market moves lower tomorrow or if the Amazon and Apple earnings are enough to keep the markets afloat. If we do move a little bit lower here, guys, obviously the support level is down here, 610 and about 607. Prior all-time high resistance will be newfound support, and the daily higher low is down here, 600. So the bulls have a lot of space right now to set some higher lows and go for the possible expansion. On the weekly, if that does not happen, I will remind you, just looking for a bit of weekly consolidation. The weekly higher lows are all the way down here at 590. The bulls working with a lot of space, and it would be a beautiful touch of the 12 EMA if they do go for the full retracement. But as I keep saying, you need a big bearish catalyst if you want to see a big weekly retracement in the market. So keep that in mind. In terms of financials not performing too poorly today, but they gave a lot of the action back. Some of the banks performed well today. JP Morgan was up a decent amount. Goldman Sachs was up a decent amount too, but you can see struggling a little bit into the end of the day. We will see if tomorrow is enough to push some of these companies higher. As of right now, unfortunately, the daily bulls have lost their uptrend, back testing resistance, 53.31 down to 52.90, and currently back into the confines of very large support, big prior weekly resistance, current support for the markets, and of course, this is 52 down about $50 monthly, looking for the good old monthly higher lows. The context is still a very nice monthly uptrend. However, we might just need to backtest this area a few more times before getting some lift. As I was saying in yesterday's video, you need more participation from other segments of financials. The banks have been doing good, but Visa and MasterCard nowhere to be seen. And that's in spite of their very bullish earnings that they released this week. MasterCard releasing earnings this morning. They crushed it, and still the stock was a little bit weak. And all the insurance companies need to come back, and the financial data companies need to come back as well. You need broad market performance in financials to start lifting this XLF again. Hopefully we can start to see that as we approach Q4, or rather as we move further into Q4, because we're already in Q4. XLV Healthcare right now still reacting from the resistance range, 148 down to about 145. Can't get it done. Still in the context of a very nice daily uptrend right now. Higher lows down here, 141. The weekly time frame makes the most amount of sense right here. Beautiful weekly uptrend. The bulls working with a lot of space. I wouldn't say it's lost, but clearly struggling with some of the resistance ranges. Eli Lilly had beautiful earnings today. We've been talking about this name, one of the stronger names in terms of the chart for a technical setup, right? We highlighted this trade when they were back testing the downward trend line right there, saying it might be a nice swing trade opportunity for some possible expansion. Eli Lilly had some really, really strong earnings today, 23% beat on EPS and a 10% beat on revenue. Phenomenal numbers, might be looking for a bit more, but several areas of healthcare remain soft. UNH, right? CNC, Elevance Health, Humana, Molina Health, all the health insurance names, guys, remain still very soft. This is a sector of the market. It's going to take a very long time to recover, in my opinion. The recovery will happen, but it'll take a while. And Merck, another very large pharmaceutical player, they had earnings today, unfortunately, not getting much lift at all. So Eli Lilly is trying its best to carry the sector on its back right now, but you're going to need to see a broadening out of the healthcare sector overall if you want to see the next leg of expansion through that big area of resistance. Moving on to SMH. SMH coming down a little bit. NVIDIA, AMD, Broadcom all coming down today. No problem at all. If we move down lower a bit, we're looking for a daily higher low. Maybe coming back and testing maybe the 350 to 347 pocket, the 12 EMA on the daily, and the previous resistance highs. That being said, the daily higher lows are down here, 332. Just looking for a casual daily higher low. Tons of space to do it for a possible continuation of the daily uptrend. If we get a bearish catalyst, and it causes the market to kind of unwind the gains that it's made in the last week of trade. I'll remind you who's in control. The bulls from all the way down here, 284. We'd just be looking for a weekly higher low for further trend continuation, something that we have done so many times throughout this very nice bull run since the month of April. So SMH still a bit extended right now. A lot of names super extended. So if we see any pullbacks, nobody should be surprised. But as I said, guys, you're going to need somewhat of a bearish catalyst to make that happen. Moving on to the Russell right now, the Russell down about 0.81%. And the Russell is just a byproduct of somewhat soft breadth, right? We have not got expansion since September. I will remind you, the Russell is not only tech companies, a lot of financials in there, industrials, healthcare companies, and unless it gets a bit more broad, you may not see the lift and the follow through that you're looking for. But they are protecting the daily uptrend right now. Higher lows are here, 240.73. If you lose this, and then you lose the daily uptrend, you're going for weekly consolidation, maybe coming down to some of these weekly higher lows, 237, 238, and lining up with the 12 EMA as well. We will see how it goes on the Russell, but the Russell definitely not doing so well because the breadth has been a problem, and as a result, the monthly candle close does not look the strongest. If that carries into early November, you might just see a back test down here of 230 down about 225, which could be an interesting swing trade location for this market overall. We will skip over the rest of the sectors. We'll cover them tomorrow. We did a big rotation analysis, guys, in yesterday's video, so please go watch it yesterday. The index portion of yesterday's video was extremely important, and I even labeled it important down in the timestamps. I'll cover it again tomorrow, of course. On to the VIX. The VIX moving a little bit lower today, right? But still kind of hovering around here at 17. Not the worst opportunity to be shopping for some lead call contracts on some names, high quality names that have maybe been left behind a little bit in the rally, which is why I built so many big positions on Amazon. I'm building current positions on Meta, and possibly after the Netflix split, if they can stay down here a little bit, come November, mid-November, maybe on Netflix as well. So you don't need to look too far. I've been making a lot of money and have a tremendous amount of success in the Discord as well with all of our members, just rotating the various big tech names for lead call contracts at certain points throughout this year when I've deemed them to be cheap and an attractive opportunity. And it seems as though when you have some run like Google running away, Apple, we made a lot of money down here with some leaps all the way into the highs. Google, we made a boatload of money from down here all the way into the highs. Now it's possibly Amazon's turn, but it seems as though when some of our plays start really running, other names free up, like Meta, like Netflix, like our new recent NVIDIA positions that we built back here that's been consolidating for 3 months. So there is always something on the table in big tech. At least this year, there's some really nice rotation amongst different players. So keep that in mind. That's what I mean, guys, when I talk about when the VIX is low, explore some of these high quality names that may not have gotten the lift that otherwise they could possibly deserve, right? Moving on to the yields not doing too much. We know there's a bit of repricing going on here because of Jerome Powell's comments yesterday saying, you know, we're not going to comment on the December rate cut. It's not a foregone conclusion. He said it 3 times. As a result, your rate odd cuts for the month of December went from like 90+% down to 74. So the market unpricing, well, you know, a soft unpricing of that, and that's why your yields have upswinged over the past 2 days, but we're still in the context of a very nice weekly downtrend overall. We'll see if that lasts, and the 20-year yields as well, weekly downtrend, but now with that news, obviously on a bit of an upswing right there, which means that bonds, a little bit soft, coming into resistance. Everybody was expecting that. Well, at least I was expecting that on the channel, which is why I said, if we accumulated bonds from down here, this is take profit area number 1. You'll have to be a bit more patient for take profit area number 2. It doesn't move that fast. You got to take profits accordingly. Moving on to gold right now. Gold actually having a very nice day yesterday, 2.39% in the context still of a daily downtrend. But we will see how much of this most recent selling leg can they get back. The retracement size matters a tremendous amount. Why? Because if they give you a very nice 618 retracement like they did right now, or even higher, that gives the bulls a chance to reverse the daily time frame back into a daily uptrend and continue the weekly uptrend as well. I'll remind you, it's a very solid weekly uptrend, and you're looking, if you want to know if this is the weekly low or not, you need to see the bulls convert into a new daily uptrend. That gives you a defined trade stop loss area, which you can put below the lows and go for further expansion into psychological targets 4,500, 5,000 for some longer duration swing trades. But until we see the recapture of a daily uptrend, the bears are still in control of these short-term time frames, which is why I'm not in the business of just saying, okay, this is the low. No, this is the low. No, this is for sure the low, right? Wait for them to show you. Then you can establish a wider stop loss and go for psychological expansion of this beautiful weekly uptrend. So we'll see what gold gives us. But as of right now, the bulls putting in some work. If unfortunately they're not able to convert and we just move a little bit lower, you guys know the drill. Where are we heading? Down to the 12 EMA, 38.30, which the bulls have protected so far over the course of the entire last year. Now, moving on to our crypto name. So crypto, unfortunately, taking a bit of a bath today. Crypto's just been all over the place, but that's usually what happens when you get stuck in a bit of a range right now, yeah? Daily uptrend, and they gave it all back. So now the bulls have to start from scratch, build the daily uptrend again. I mean, they can go for the V shape. It's the unlikely scenario. Usually when you see a full retracement, either the bears gain control or the bulls have to do it all over again. That being said, guys, easiest way to look at this chart is on the larger time frames. You're just stuck in a consolidation range. Resistance 120 down to 115, support 107 down to 100,000. I've been saying it over and over again. This is just monthly consolidation for Bitcoin right now. They've done it several times in the past during this bull run. And if things get a bit worse and we keep moving through support, you might just come back here and test the 12 EMA on the monthly, which the bulls have done many times before. So as a result, I am accumulating some Bitcoin positions every time we come down into here. Ethereum, same concept as well, right? They tried to go for the daily uptrend expansion, once again reversed into support though, right? This whole 4,000 out of 3,700, they've been defending it really well. It is a weekly downtrend, which means you are just in the confines of monthly consolidation. And I keep saying it over and over. Ethereum, decent proposition. As a matter of fact, somebody else agrees with that as well. Somebody else that you never would have thought would have came over to Team Crypto. Who am I talking about? This guy right here. JP Morgan CEO today. Jamie Dimon once called Bitcoin a pet rock. Now he says crypto stablecoins are real. We'll all use them. As he was sitting down next to the BlackRock CEO, Larry Fink, during a conference today, he acknowledged that crypto, the blockchains, and stablecoins are real. And it marks a notable shift as his bank prepares to let institutional clients use Bitcoin and Ethereum as loan collateral by the end of 2025. That is absolutely massive, guys, right? He added that JP Morgan already operates a deposit coin, their own coin, and uses smart contracts to improve transaction efficiency and customer service, noting it will be used by all of us. That's a very big pivot by Jamie Dimon because he's been against crypto for the longest time. So as a result, am I buying Ethereum here? Yes, but I keep telling you guys, beware of the full retracement size. If Bitcoin goes for the full retracement down to the 12, Ethereum might just head for its own full retracement down to 33 to 3,000. So keep that in mind. That would be a casual 50% retracement down to the 618. That is the pocket, the golden pocket in the confines of a nice monthly live expansion. You got to nibble a little bit here, but save some money if they go for the full retracement. You cannot know if they're going to do it or not. So you got to save some buying power, right? Moving on to our big tech list, and it should be a very fun big tech list today and even tomorrow. So moving on first, of course, to good old Apple. Apple, which is currently up about 2% in the after hours right now, clipping into 280, pulling back a little bit. I'll remind you who is in control of this chart. Now that the bulls are all the way up here, it is still your bulls, and Q4 should be pretty good for Apple. That being said, the daily, little bit extended right now on the RSI levels too. Tomorrow is going to be a big gap up day, but they've created a lot of space. Any pullback, anything above 255, looking for a daily higher low for possible further trend continuation. Daily bulls, full control. Weekly bulls, full control as well. Gorgeous weekly uptrend on Apple, but as I keep saying, it is a little bit extended up here. Your weekly RSI is going to get a little bit overbought, and this stock is not like NVIDIA or Palantir. It usually does not stay weekly overbought for an extended period of time, so we may be nearing a possible local top for Apple stock, but as I said in the earnings presentation, their Q4 should be pretty good, so the bulls should be able to retain some of the longer term control, and you are just looking for a nice leg of monthly expansion right now, and the monthly MACD crossing over. So Apple looking strong, but very tough to position all the way up here. On to AMD. AMD down 3.59%. Not the biggest day of red for AMD, but what goes up must come down. It moves in waves, of course. A daily uptrend is nice. Looking for a daily higher low, anything above 224. Looking for that daily higher low. Maybe coming back down here. Prior resistance, current support, and it does line up pretty well with our 12 EMA, right at about 242. So we'll see what happens for AMD overall. Decent price action, but the weekly, not gonna lie, it's been extended for a couple weeks, right? Since that big OpenAI announcement right there. Very extended on the weekly. So tough to position for short-term swing trades up here on AMD. Long-term positions, though, should be quite clear. Around 240, 250, they're trading at a 2-peg. Not too bad. My price targets on AMD for end of 2026 into 2027 is between $300 to $350. I think they can do it because the fundamental thesis, margin expansion, EPS expansion, and of course, huge revenue expansion is going to be coming. They're just coming into that cycle right now. So I'm still very bullish on AMD for longer term positions from here, but short term, a little bit extended, of course. On to Amazon. Amazon, of course, is up 14% in the after hours right now. They're right around 250. So we'll put a line right there. Nice breakout, right? On the daily, it's going to be a continuation of this nice daily uptrend, but we're going to have a big old gap, right? If you come back down and test some of these former all-time highs, it should be very clear what they're trying to do. The good old breakout retest trade. That would be a nice location for possible further swing trades, right? Clear price action structure right there. But as of right now, I'll be honest with you guys, after the earnings release like this, it's tough to position right after an earnings release like that, right? That's not how I trade. I usually wait for back tests or whatnot, or I position during extended monthly consolidation, which it was. We kept highlighting. It's a very nice monthly uptrend, right? They're just going for a bit of a monthly bull flag into the 12 EMA, into support. They did it perfectly, and now you get the nice leg of expansion. So that is everything for Amazon. Congratulations to all shareholders. Moving on to Google right now. Google, strong earnings yesterday, giving a little bit of that back today, but we know Google's just been printing so far, right? So not too worried, but still very extended right now on the daily RSI. Anything above 245 on a pullback, looking for a daily higher low. If they just push further, obviously the psychological target is $300 on the technicals. Very tough to position on Google right here for a technical swing trade, right? You are really buying after the rise, and usually that's not the best proposition for risk to reward. On to the weekly time frame right now. As it currently stands, the weekly bulls are in full control, obviously, of this chart. Any move lower, if we get some big extensions to the downside, like Microsoft did last quarter, you might just be looking for a weekly higher low. Anything at this point above 237, looking for that higher low, maybe backtest here, 255, 256, prior resistance, current support, maybe the 12 EMA has time to catch up. That would be something that makes sense, but swing trades on Google up here, bit tough. But in terms of longer term positioning, right? If you have a long-term thesis on Google, is Google somehow still a buy at 280? We did it yesterday, guys. The valuation still does make sense up here, right? So even if I'm a Google shareholder, am I DCAing up for some shares as long as this valuation is cheap? Yes, I am. Although most of my position was built in years prior, I still don't mind buying a couple Google shares up here. Moving on to Meta right now. Meta down 11.33%. I'm pretty sure everybody's wondering, is Meta a buy down here? We covered it after earnings. If it was a buy yesterday when we covered it after earnings at 695, of course it's a buy at 666. That being said, when you have such a big earnings move down, ask Netflix, oftentimes you don't recover it immediately, right? So Meta for me is a decent accumulation trade down here, building long-term shares, but also if I'm looking to build long-term leap positions, not a bad time either. If I'm looking to sell short puts, I'll be targeting the support area below for big accounts only, of course, because it is capital intensive right now, but not too bad. Of course, they've lost the daily structure. The weekly downtrend continues at this point, but The key here is the monthly. They've perfectly back tested the monthly 12 EMA today, and that's where they stopped. I'm not saying they can't go a bit lower. They can go a bit lower, but historically, in the context of bullish expansion phases for Meta, you know, unless you're in a global pandemic or a big old bear market or a big old tariff bear market, right? You know, if we play Meta when it touches the 12 EMA, has it been a good buying proposition in terms of future outlooks? The answer is always yes. When you couple this with decent fundamental valuations, it improves that proposition even more. So I am a buyer of Meta down here. I'm not building some short-term swing trades. As I said, short-term swing trades, you're going to need the price action to level out a little bit. Just like Netflix, when something comes down big after earnings, you got to wait for your short-term bulls to become back in control for short duration swing trades. But long-term shares and long-term leap call option positions into 2027, let's say, decent proposition, decent risk to reward, in my opinion. On to Microsoft right now. Microsoft pulling down 3%, giving back everything from the OpenAI restructuring deal push, right? That being said, Microsoft's not really in jeopardy of losing everything. Support's down here, 518 down about 500. They had good earnings. We covered them literally yesterday on the channel. And as a matter of fact, around 520, the valuation, guys, is not that bad because we got revisions to revenue and EPS growth over the future with how much money they're making from Microsoft Azure and how much RPOs they have, remaining performance obligations they have into the next few quarters and few years as well. That being said, Microsoft not looking too bad, right? Your daily higher lows are here, 507, and really big support. They've established the support level for the better part of the last, let's say, quarter. So not the worst. If I'm looking to buy some Microsoft shares and a support, not the worst. If I'm looking for some longer duration swing trades or whatnot, and we come down into support, I might be looking to do those with a stop loss below the infamous 500 psychological as you're just playing this monthly phase of consolidation. But if you crack 500, you might just be going for the full monthly retrace down to the 12 EMA, kind of like Meta just did right now, yeah? That's my thoughts on Microsoft, or rather, those are my thoughts on Microsoft. Moving on to Netflix right now. Netflix, the good old stock that got some nice stock split announcements today. Netflix is the same concept as Meta, right? After earnings, they got hit with the tax hit, daily downtrend, so tough to position for some short-term swing trades. Now, they went up 3% in the after hours because of that news, but we will see. Are they able to reclaim resistance? 1150 is the top end of that resistance. That's these guys that acted as support for like 2 quarters almost. They lost it. They're going to try to get it back. If we can get the support region back, then we have a stop loss, tradable bottom right there, which would be your weekly lows and possibly even your monthly lows as we approach into the 12 EMA. Now, I'm not doing any swing trades on Netflix just yet, but as I said, after the split, if they're still in the same location here, in terms of, mid-November type of thing, could be interesting for some leap call options at a lower share price. But buying shares here, guys, I literally just bought some shares down here. As I was telling you guys, 1,100 down to $1,000 is my pocket to accumulate more shares, as the valuation definitely makes a lot more sense than it did at 12 or 1,300. Moving on to NVIDIA right now. So NVIDIA, bit of a consolidation day after their massive run recently, guys. From this area, the lows to the highs, it doesn't look like much, right? That's a 20% move on NVIDIA almost. Massive move by NVIDIA. So of course, has to consolidate a little bit down there, but we just got all the tech CapEx guidance for next year. NVIDIA is going to be making a whole lot of money, and they tipped us off about this CapEx guidance when they had their GTC a few days ago, when they said, listen, we're increasing our revenue run rate over the next 6 quarters to $500 billion, which is absolutely nuts, right? That being said, if we do find NVIDIA on some consolidation, there could be some nice trades here, either for some shares for the long term, because now with that revised guidance and the increase in EPS and revenue growth rates, in relation to what we were expecting, NVIDIA is trading right now, depending on which EPS estimates you use, it's a range, of course, right? With the revised guidance, you're trading at between like a 1.26 and a 1.43 peg. Not that expensive at all for this company. So I will be a fan of buying these pullbacks and probably this previous high, the daily highs, and maybe just looking for a little bit of weekly consolidation in the confines, or rather in the context of this gorgeous weekly uptrend right now. NVIDIA, not the worst proposition. My forward price target for into 2026, late 26 into 2027 is going to be around $300 with those quarterly revisions that the company just gave us. Moving on to Tesla right now. Tesla, the failed breakout, unfortunately. That being said, the bulls still in control right now. Higher lows are down here, 415. We'll see if they can actually put a stop to the bleeding, use a lot of this price action to kind of establish a bit of a breaking area and then maybe move a little bit higher. But as of right now, the bulls are in control. Daily MACD tried to cross, but couldn't quite get it done today. 4.5% to the downside. And as a result, on the weekly timeframes, still just consolidating. But you could argue that it is somewhat of a bull flag, right? Big push higher, and they've been consolidating in the top end of the move. If we see Tesla come down into here, though, that would be the best proposition, in my opinion. 410 down to about 384. That would free up some really nice swing trades into a nice support area, and just looking for a monthly back test and possibly run into Q4 and into Q1. And that being said, guys, right now, Tesla, if you're investing in Tesla right now, you need to have a very long-term thesis for the company, of course, which we did cover after their earnings last week. Moving on to Palantir right now. Palantir, 2.14% to the downside, but that doesn't really matter. Why? They have earnings on Monday, so only 2 trading days before Palantir's earnings. Nice breakout here. The bulls are looking for the back test and maybe run. But like I said, the stock is going to move probably 10% up or down after earnings, so it doesn't really matter. 10% higher, you're at brand new all-time highs, 210, 215, 220. 10% lower, you got a nice amount of cushion, right? 10% lower will just put you at the bottom end of this support range. So we will see what happens in terms of Palantir's earnings performance. Appears to be very bullish, especially with their partnership with NVIDIA recently. The valuation, guys, hasn't made sense for a while. And the technicals, especially on the monthly, haven't made sense for a while. But you guys know the drill. Palantir is a story stock. People are looking for the expansion of the market cap, not so much focusing on the short-term fundamentals, but expecting the company to eventually be able to grow into its market cap as an indispensable piece of software that will be used for possibly decades into the future. Moving on to SOFI right now. SOFI down 6.05%. So unfortunately not able to keep up the post-earnings gains, but the stock isn't looking too bad in terms of price action. Still a nice daily uptrend. We are back testing the resistance range, currently support, but the bears are making quick work of it. We'll see if we consolidate a little bit further, but the expectation as of right now is for continuation of the daily uptrend. If you give back too much, then you open up the door for the daily downtrend and a bit of weekly consolidation. The weekly higher lows are down here, 25 roughly. So the bulls are working with a ton of space that even if we lose this zone, you still have a lot of space to work with here for a higher low for possible further trend continuation into Q4. That being said, we were noticing on SOFI after the earnings, right? Bearish divergence. So usually that does correct in the direction of price. So if you do move a bit lower, guys, phenomenal opportunity to be selling some put options. 25 down to the lows of 22, which is the pocket prior resistance, of course, and now current support as well. So it's a range. 25 down to 22 would be a nice buying location for SOFI, and we would just be looking at that point for a little bit of maybe monthly consolidation into the month of November, into a nice support range. Give us a monthly back test, and I will be a big fan of building maybe even some larger swing trade positions on SOFI. As of right now, the stock currently trades at around 29.30, 1.22 peg, and an 8.6 forward price to sales. Would not be surprising to see SOFI turn into a $40, $50 billion company, $60 billion company over the next 1 to 2 years if they continue executing on their business model. They've been doing good, but always remember, the stocks sometimes move in waves, and we want to take advantage of the down waves when you have improving fundamentals. That's when you find a great technical setup and a great fundamental setup at the exact same time. I'm not selling any SOFI shares. I'm not necessarily buying any more up here, but I'm not selling. If you want to see me build big swing trade positions, I might just be looking for a bit more consolidation after this earnings. Moving on to our 2 last ones, Uber and TSM. Uber, decent, but they have earnings on Tuesday, right? So the bulls looking to expand. I'll remind you, they got the $100,000 robo-taxis partnership with Stellantis and NVIDIA. That was announced 2 days ago. We might just hear more about that during their earnings call in the next few days. But Uber is probably not going to move that much before earnings. I'm not expecting a break above 100 before earnings, and I'm also not expecting a break below 90. So the one thing we have to focus on is the fundamental valuation. Does it make sense at 89, 90, low 90s? It does make sense, right? I mean, it's 10% higher than that right now, roughly. Just add 10% to these valuations. It still makes sense. Growing revenue, EPS, really nice. Monthly active users, mobility, deliveries, all growing very nicely. Support stays put 93 down to about 90 bucks. I'm holding all the Uber shares that I have. I'm not adding any more up here, but if I wanted to, my position's fully built, but let's say I didn't have a fully built position and I'm bullish on the company, I wouldn't really mind adding here, you know, even prior to earnings. And if we get a dip after earnings, all the better, right? Just looking for some monthly higher lows on the company overall for possible expansion of the fundamentals into the future. And last but not least, good old Taiwan Semiconductor, which got a big shout out from NVIDIA over the course of the past week. Of course, their services will be highly needed over the next 2, 3, 4 years as we continue this infrastructure build out. Daily uptrend, failed breakout by the bulls once again. Higher lows are down here, 284. We will see what happens, right? If they are unable to do this, you want to see them hold these lows, or it's going to turn into something awkward like this, which was a nice consolidation period for TSM. And if it does turn into something like that, am I buying? Yeah, because we'll just be looking for a nice weekly higher low, maybe down into the 12 EMA, 275, 270 type of thing off of any semiconductor consolidation, weekly overbought levels. And down there at 275, you know, the valuation will make sense. It makes sense still at 295 for some nibbles, for some longer term shares, as we are currently trading at a 28 forward price to earnings and a 1.68 peg as well, with extremely strong revenue and EPS guidance and extremely strong net margins too. TSM, probably one of my favorite semiconductor companies on the planet at this current time, and I'm definitely not selling any shares, and we'll probably be adding some shares on any and all dips. And that wraps up all of our market analysis. Unfortunately, video's too long for me to do, biggest gainers and losers, so we'll have to save it for tomorrow. Hopefully you guys understand. That being said, that's everything I had for you. So if you enjoy these types of videos, I know they're long, but I try to give you guys so much context and so much analysis, right? I could make these videos 20 to 30 minutes long, but they would be nowhere as deep, and I would just be I would just be reporting the news without analyzing it, without giving context, and I would just be saying, okay, TSM, resistance here, support there, next chart. I don't think there's any value in that. I'd rather explain the thought process, and of course, the thought process is what makes these videos so long, you know what I mean? So if you enjoy this type of content, I would really appreciate it if you drop a like on the video. Helps me out for the growth of the channel. Please consider subscribing as well. I'm so close to the ever so elusive 10,000 subscriber milestone. I know there's no reward for me in it whatsoever, but it's just a personal goal of mine. I've been having a lot of fun growing the channel over the past 2 years, and I really need your help to hit that 10,000 subscriber mark. So I would enjoy it if you click that subscribe button. And last but not least, if you have any questions, guys, feel free to leave them down below in the comment section. Or if you're trading some things and you want to let us know, I'm always open to any and all comments, and I love reading and answering your guys' comments down there. And last but not least, if you guys are tired of trading and investing in the markets all by yourselves and you want to do so in the context of a very active and fun trading and investing community with over 300 members such as yourself, you may consider joining our trading and investing community, and the link to that community is down below in the video description. That being said, what do you get access to in the community? Well, of course, you get access to all of my trades, all of my wheel trades, all of my leap call positions, my swing trades with shares or call debit spreads or shorter duration swing trades. Here's most of all the trades that we've made in the past few months. The green little check marks are wins. The red little circles are losses. These little targets here are assignments for the wheel. So I like to keep my wins frequent and big and the losses infrequent and small, of course. Here's just a lot of the trades that we've been making over the course of the past few months. I'm always very transparent with everything, of course. That being said, you also get access to our private morning live streams. Every Monday through Friday, I stream for about 2-3 hours. I trade the markets live, but I also take all of your questions on your stocks, your options, and your long-term portfolios. So if you wanted to interact with me one-on-one and ask me those questions on your stuff, that's the best place to do it. If you can't be there, they are recorded. Feel free to watch afterwards. And additionally, you can ask me all of your personal questions in our chat rooms all throughout the day, and I'm very fast to answer everybody too. You also get access to our private educational section, a bunch of videos that I will never put on YouTube, unfortunately. Educational stuff like different trading strategies for leaps, call debit spreads, put credit spreads. How do I do it? All the tutorials are in there. How to build a trading account with, depending on your risk tolerance and the amount of money that you have, which portion of the account should be in which strategies, etc. Also, how to build a long-term investment portfolio too. Technical analysis videos, fundamental analysis videos, over 15 hours of education in that section. Our members enjoy it a lot. And last but not least, if you enjoy my technical setups, such as support resistance levels that I put on hundreds of charts, fundamental breakdowns after earnings or otherwise, you get to copy and paste all of my charts and all of my watch lists that I use to trade the markets every day. If you don't want to do it on your own and you just want to copy what I have, it's just an added benefit for our Discord members. If any of that interests you, the link to join us in the community is down in the video description, and you can use coupon code, the promo code, capital letters, Halloween25, and that'll give you 30% off of your first month. If you wanted to come check it out, try it out, see if it's for you. definitely use that promo code. I will put it down below in the video description. So I hope to see a few more of you guys in our Discord with us soon. And if not, I guess I will see you guys back on the channel. That's it for me. Have a good rest of your evening and have a great Friday session. I'll see you guys tomorrow after the close. Peace.